To date this year, we bought a little 114 unit. We took over a mixed use project, which is 60 units. And then we're closing 300 units this week, actually. So slower on the buy side than we wanted to, but we're still out there. We're not pencils down. We're constantly looking at deals. It's just a matter of, hey, debt's a lot different than it was before. So what are we doing? Are we assuming a loan? Are we getting high interest fixed debt and making it work?
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, we are with a guest that some of you may have heard of, some of you may not have. He's been on the show before, but it's been a few years. A friend of mine, I enjoy catching up with him, but his name is Devin Elder. He's the founder and CEO of DJE Texas Management Group, vertically integrated, a firm based in San Antonio. Since 2012, they've completed hundreds of successful projects, including full cycle, multifamily investments, of course, principal in 5,000 plus doors. He's also a pilot, podcast host, brokerage owner as well. And he's the founder of the DJE Foundation, which you'll hear at the end of the third segment. He'll talk about that in how they're giving back in that way. I love that. I love his desire to be that intentional about giving. But you know what? You're going to learn a lot from Devin. And we're going to do a series of 3 shows together, and we're going to dive into a number of topics. He's a very experienced operator that I look up to, and you're going to enjoy this show. Devin, welcome back to the show. I've been looking forward to this interview. You and I haven't got to catch up in a couple of years, I think, but you've always been somebody I've respected in this space. And so I value your thoughts and I know the knowledge and things you're going to bring to us over a series here, just so the listeners know. We're going to do at least a couple shows with Devin and dive in on a number of topics that are going to be relevant to you today in your business. But Devin, welcome back.
Whitney, it's my pleasure. I'm glad to reunite here on the podcast, and I was happy to see this on the calendar today. So good to see you. Look forward to catching up.
Yeah, me as well. Devin, give us a little bit about your business right now. I know there's a couple of things you and I talked about. We're going to dive into, but give us an overview. What DJE, what y'all are up to at the moment. Maybe how things have changed a little bit over the last year, and let's dive in.
Yeah, I'd love to. So just kind of current snapshot of where the business is at. We own varying ownership stakes in about $250 million of real estate. All of that's in Texas. Most of that's in San Antonio. Most of that's multifamily. So multifamily deal, I might have 30% ownership, 25% ownership, just kind of a general partner ownership. We usually syndicate that. And then we've got industrial projects. We've got rural land projects, which is kind of off the beaten path there, but has been good for our business. And then we've got the management company as well. So our company's about 75 strong right now. Most of that is on the multifamily property management team side. And then, here I'm sitting here in our corporate headquarters downtown San Antonio with kind of the accounting team, investor relations team, transaction coordinator, a brokerage that I'm a partner in, and a consulting company that I'm a partner in. So this is kind of our hub, and that's what the company looks like right now. We wanted to come out and buy 1,200 units as kind of our target for 2023. Just like to set that out there. Not that we have to. To date this year, we bought a little 114 unit. We took over a mixed use project, which is 60 units, and then we're closing 300 units this week, actually. So slower on the buy side than we wanted to, but we're still out there. We're not pencils down. We're constantly looking at deals. It's just a matter of, hey, debt's a lot different than it was before. So what are we doing? Are we assuming a loan? Are we getting high interest fixed debt and making it work? Are we, what are we doing there to still do multifamily deals? So we love multifamily. We're built for it. It's the majority of our portfolio, but we've got some other avenues, both for us with our operating overhead that we need to meet those objectives. And then for investors too, we want to constantly have a menu item. It's no good to get somebody fired up about putting $50K in a multifamily deal and you don't have a deal for them at all for 12 months. That's not a great experience. So we found some other ways to kind of, I would say, have regular deals to put in front of investors, which I feel like helps keep us relevant, helps keep people's money moving, which is what a lot of folks want.
That's awesome. I appreciate you mentioning a few things there, because I was telling you this before we started recording. I know the listeners have heard me talk about this a little bit, is that obviously it's been a time where these multifamily deals we've been doing has kind of dried up a little bit, right? there's just not been the deal flow, or there's not been deals that we can get done, right? With debt as high as it is, or expensive, and interest rates. So I think there's been a few ways that you and many of us have had to be creative, right? And I think it's waits in times like this, it pushes us to be better, right? In so many ways. And I think we're going to dive into some of that. You mentioned closing a 300 unit deal, I think this week. Is that right?
Yeah.
Can you, since you mentioned that, I thought it would be helpful. Can you highlight that, or are you able to talk about that deal?
I don't have to disclose every last detail. It's actually two deals adjacent to each other, same ownership group. And it's a basis play. I mean, we're getting fixed rate debt with it that starts with an 8, that'll make your eyes cross, right? Especially when I'm looking at some of our fixed rate debt. We've got a deal we're taking to market with, most likely it'll be an assumption at 3.5 on the rate and 7 years left, right? Just like things changed a lot in the last 18 months here. So anyway, high rate, but really, really good basis, 20-year ownership, which I rarely see. And just kind of all the things you want, 100% occupancy, well below market rents, well located, all that kind of stuff. So it worked because of the basis, and the seller's basis is so low because they bought it in, the year 2001, that it's just like we're in a different universe. How much inflation's happened since then that, are they selling it for less than they could have 2 years ago? I'm sure. Do they care? They don't care, because their basis is just, you don't even want to hear it because it's so low.
Yeah,
they're
especially being the buyer.
So, but our basis, it works great. It's a rebrand play. It's an operations play. It's a value add strategy play for us. And so that, that's one that, we moved quick on. We actually put hard money on it too. And that's how much conviction we had in the deal, in a market where hard earnest money is just not really a thing. We just saw this one. And I'd mentioned that we're not really pencils down. We're always looking at deals.
Mm-hmm.
Got an analyst and brokers helping us, looking at deals every week, making offers, want to transact. And, that's acquisitions you're going to swing and miss just about all the time. And so when you see one that makes sense, first thing you do is say, okay, what are we missing? Why are the numbers working? Did we, is a sell wrong in the model? Or first question, what's going on here? Why is this penciling? And then once you get a bunch of eyes on it, you get your debt broker to look at it, you get the analyst and the operations team, and everybody's kicking around, and you validate that, okay, no, we're looking at this the right way. We're excited about this. Let's put everything we got behind it, make sure we win this thing. So that was kind of the deal behind that. We put fixed rate bridge debt on it just because we want to be able to forecast our number. We've got some variable rate stuff and rate caps. And if anybody's been dealing with that the last year, it's been tricky to navigate with some of your debt service climbing, or if you have a rate cap maturity coming up, you got to figure that out. So we want to say, hey, we're gonna fix it. We've got 3 years +1, so possible 5-year term. We kind of assumed we're going to be in the same high rate the whole time. But if we get an opportunity to refi or sell in a low rate environment, that'll be some bonus, but we're not counting on it. Again, just kind of a basis, good old fashioned value add play where we're going to go in and spend close to $4 million on rebrand and new office and parking lots and roofs and, painting and interiors and kind of the whole 9 yards. So we're excited about that deal. Glad to have one to kind of get done here right at the beginning of Q4. Keeps the team busy.
Yeah.
Across the board, investor relations and the operations team. And, we want to be doing deals. It's been slower for us, like it's been for everybody. But I think the name of the game for us is it's always been hard. Like acquisitions for me, never been easy. In 10 years of doing it, never been easy.
How did you all find this deal?
Broker. I'm as a marketed deal.
Okay.
So, it was a deal that there's one broker that, for whatever reason, has been staying real busy in Austin and San Antonio. And we've known him for years and have good relationship. And he was able to give us a pretty strong recommendation to the seller.
That's awesome.
Yeah.
It's been interesting. The brokers that are still active at the moment, right, are the ones that are still calling what's happening. And because, man, I know it's it's been slow for them, right? No doubt about it.
Sure.
Any other before we move on? I was just thinking about even this deal, how much are you all raising for this?
11 million.
How would you gauge the raising ability now compared to 12 months ago or 18 months ago?
It's really interesting. We do a number of different types of deals, and there's some debt stuff, and we have a fund, but let's just talk good old fashioned multifamily syndication. We've always done them like a lot of folks do, just kind of on demand. Get the deal under contract, do some due diligence, get it to a point where you're going to close it, launch it, and raise the equity. And we've been at this for a number of years, so you always feel pretty good about, hey, but every time we launch a deal, it's like, hey, how, is this going to fill up overnight? Is this going to be a lot of phone calls? How's this going to go? I think, $11 million in this market was pretty straightforward for us. We raised it pretty quick, but I think that's a function of a couple of things. One is just kind of that snowball effect of adding investors over years and years. So the investor base has just grown a lot for us. Mm-hmm. Two, less deal flow in the last, in the last year. We wanted to buy 5-6 deals this year if we could find them. And I think we had the ability to do that. It's just we haven't found them. So less deal flow, more investors. And then I think just the story of the deal itself. Hey, is there interest rate risk on the table? No, we've locked that up. That's not really the issue. We're paying a high rate, but the basis, we want, on the buy side, we want low rates and low prices. Not going to happen at the same time, right? If we got low rates, we're going to pay high prices as buyers. Right now we have high rates. And so if you can find a low basis and make it work, then that's it. So to answer your question, I think for us specifically on this deal, it went well. It was very smooth, but that's because of limited deal flow this year for us and a growing investor base. So that was kind of it. Anecdotally, what I'm hearing from operators out there is that certainly it's more challenging than it's been. What
would you say is your and I normally ask this towards the end, but I think it's helpful right here. What's your best source for meeting new investors, and you're all growing your investor base right now?
Right. I'm on a bunch of calls this week with some marketing firms. We've not ever paid for marketing or done anything, but I think it's time in our company's history to start exploring that, right? We've got the budget for it. We've got the team, got maybe the infrastructure to handle that. Historically, though, this company started with me doing houses with hard money. And then once I had a track record there, borrowing $100,000 from a guy I met at a meetup who was my first private lender. That was this big aha moment. And then, and he was easier to work with and a little lower cost capital. And I thought, man, I can do this all day long. If there's built, then there's 2 private lenders, then there's 5, then there's 10, then there's a syndication, which is different, but really started with one person and has kind of grown since then. We brought Justin on a couple years back. It's been about 3 years now since Justin joined. He's our head of investor relations, and to kind of take over that, talking to investors and the whole investor experience. Justin runs that, but it's still very organic. I've got a podcast, and I'll tell you, number one, just to get to the punchline, it's a referral. Absolutely. It's somebody's in a deal. We took care of them. Now their brother wants to take a look. And that's been it, which I think is great for any business, right? That's the best kind of way you can grow. So referral, it's been a long, slow growth path for us. But what we set up a few years ago was let's just focus on having a phone call or 2 a day per business day with a prospective new investor. And that's somebody that has the capability to invest. They know our minimum is $50,000 and they're interested. Okay, that's enough. Get in the system. We're going to have a call with them. We're going to send them a Starbucks gift card and an email, say thank you. We're going to put them on the newsletter list. We're going to let them know if deal launches. And as long as we're just doing that consistently, and how I knew I needed to hire somebody for investor relations is I set some goals, and that the week could go by, and I said, man, I had one investor prospect call this week. That's not going to cut it. It's time to hire somebody. But we've been doing that consistently for like 3 years now, and so just organically having those conversations, relationship referrals is how we've done it. And so, I will occasionally go speak. If I'm going to go speak somewhere, it's leveraged. I prefer to be in front of a lot of people to where that time is highly leveraged for me and making maximum impact. So I do some speaking and things like that. But at the end of the day, it's Justin just kind of day in, day out, having conversations with new folks, telling them about what we do, putting them on the list and letting them know when we've got a deal.
And they're coming. You mentioned from referrals, but any other way that they're finding you though to be able to have that call with them?
Yeah. So, I've got a podcast, and I think we don't have the best tracking mechanism in the world to be able to point to, they listened to episode 166.
Yeah, it's hard.
But we're out there with that. And then I'll go do speaking engagements. And again, it's really hard to kind of point to a path, for that to come in. But we get a lot of anecdotal feedback about the podcast and events. So I think, for somebody that's out there syndicating, set a target for yourself to have those lunch meetings, to have those coffee meetings, to have those 15-minute Zoom calls just to kind of get to know people. And I think you can always continue to have those conversations, even if you don't have a deal. Everybody wants to have a deal, obviously, but you can continue to do those exercises and go through that and build those relationships over time. Because, a month is going to go by, 3 months, 6 months, a year is going to go by quick. And if you are consistently having those conversations, that's going to build up over time. So
you mentioned like your newsletter as well, that, just so it's another way you're staying in touch, right? And we won't spend a ton of time here, but like, what do you put in your newsletter? How are you adding value, good content to your investors there? Who's responsible for that? How do you come up with it?
Sure. So I think I recommend anybody that's trying to raise capital start a monthly newsletter as soon as they're willing to commit to it forever. Like, don't start it and stop it 3 months later. And the months go by surprisingly fast. You're like, gosh, is it the first again? We got to publish again. One thing I did was started numbering them, which, the first one, not going to be that impressive, but we just sent out our 70-second. Actually, sorry, we're sending out next Tuesday. 70-second newsletter. That's 6 consecutive years of newsletters, And if I'm reading that, I'm going, oh, hey, if I'm looking at Whitney Sewell's podcast and there's thousands of episodes, you go, okay, this guy is not brand new to this thing. It's instant kind of credibility for you to have that longevity. So our newsletter is a monthly deal. It goes out. We're on MailChimp right now. It starts off with a letter from the principal. So me just kind of recapping what's going on in the last month. And then, we'll plug in if we've got events going on. That's one block. We'll plug in. We pretty much have a standing block for our income, our fund, which is always on. So we can always mention that. We always have a couple events going on in San Antonio, Austin, or Houston. So we'll plug that. I publish a weekly podcast. So there's 4 podcasts that we can put in there. So the content is almost kind of like automatically done. We're doing events. The team runs that. We're doing a podcast that I host it, but the team runs that. So we've got 4 podcasts a month. We've got a message from me, which I've got a monthly reminder for myself to kind of start writing it, and maybe we'll pull in some stuff where we're featured in the Business Journal or different things going on or different wins. If there's something notable that happened with the team, maybe we had our Christmas party or something like that. But the blocks are almost kind of set, right? Note from me, podcasts, events, mention the fund, and then anything else noteworthy. So, I tell people, you build a newsletter, think about having 3 blocks, and one of them is an intro from you and what's going on with the family and what real estate stuff you're doing. And another block is maybe something that you're listening to that added value for you or a conference you attended. And another block is maybe you went on a tour of a project. And so I think if you just kind of format it that way and try to systematize it a little bit, so you're not, trying to come up with this stuff on the fly last minute. But
that's helpful. I get questions all the time about something as simple as a newsletter. So it's helpful to hear even what you're doing. Congratulations on 70 some of them. That's right. Awesome.
Thanks.
I love that, numbering them, and then knowing that you commit to this, plan to do it forever. But you have a system, right? And you're thinking of that through the month. Your team's thinking of what to put in there. But I think it's helpful for your investor list to see that from you all the time, right? And even that is like it's a newsletter. They're hoping to maybe learn something. They learn a lot probably about you personally and your team, different things they're taking from you. But there's no ask typically, or maybe there's some small call to action, but it's not like come invest in our deal every month, right? Or they do see your debt fund, they're reminded of that, whatever it may be. But then it's different when you send out maybe a notice for a deal, right?
Totally different. Yeah, we'll even, we actually moved. We were going to we publish on the first Tuesday of the month, which was going to be yesterday. But my investor relations, Justin, was like, "Hey, we're pushing out this land deal, and we're real cognizant of like not spamming people. We don't want to send you 2 emails on the same day that are different. I'm on some lists where I get an email every day. I'm like, okay. But for whatever reason, we haven't done that. So we actually pushed our newsletter to next week so we could get a deal out and create a little bit of space. So yeah, it's a separate kind of deal notification for sure.
Awesome. Well, that's just a little sidebar there. I just wondered about how you all raised money for this deal. I appreciate you sharing about this 300 units. That's impressive. I'm not really hearing hardly anybody closing deals right now. So it's amazing you all, you all got that done. Congratulations to you and your team on that. Devin, we'll end this segment here, and just the listeners, we're going to do another one and dive in on a few things a little further with Devin. But how can the listeners get in touch with you and learn more about you?
Best spot is our website. Our company's DJE, so djetexas.com. That's Delta Juliet Echo, and then Texas spelled out.com. And it's all there, podcast, contact, what types of deals we're doing, all that fun stuff's there.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.